If you're planning on switching your trading strategies, this video is for you. We are at the end of the month and we need to do our monthly audit to know how did we perform and what can we improve. So my strategy this month gave me about 3% profit, and it has proven itself that it is profitable. So first, let's look at the process. So this means that everything we do in terms of behavior, we can track. And the first thing that we track is the weekly cycle. So Monday will always set the high and the low of the week. And that is the first step in our cycle. Now, once we have the high and we have the low of the week, then Tuesday also might give us what we call a failed breakout. That being the low, that being the high. Tuesday might break out and then close back inside of the range. Now, this is our signature signal to start trading. If we don't have any failed breakout, then we have no business trading. The reason why this is important is because I can now piggyback the fact that the failed breakout is fairly accurate, 50 to 60%. And if it's 50 to 60% accurate, I have an edge in the market. I just have to find ways for me to make more money using that edge. Now that we know what exactly we are looking for, a failed breakout, the trading day also is tracked through behaviors. So every single day that I come to the screen, I do the same things over and over again. So this week we only took one trade, and let's break that trade down. So we have Monday setting the low and the high of the week. So Monday begins here and ends here. Then on Tuesday, price breaks below our level and then comes back inside of the range, giving us a failed breakout at the low of the week, which is a buy signal for Wednesday. Now, on Wednesday, price broke out of the high of the week and then closed back inside of the range, giving us a sell signal. Now that I know what will happen on Thursday, I come to the screen at very specific times. Now, for London, I come to the screen between 3 and 5 a.m. New York time. And then for New York, I come between 9 and 11 a.m. New York time. This is the times that I trade. Now, I look for the high and the low of the day. This is for me to know the range if I have a big risk to reward ratio. And then I look for level. Now, levels are areas where price has bounced off of more than once. So we have that level there, and we have this level there. Now that we have our levels, we have the high and the low of the day. Our theory is we want price to break below our level to start going down to the low of the day and also to the next level. So this is in the London session. Price does not break below but actually continues higher, which is no problem. So we wait for New York to see what happens. And then in the New York session, we have this nice level forming here. So we have this level, price bouncing off of that. So in my head, so we have that level, we have the first bounce, we have the second bounce, and price continues going down, bouncing. And then the breakout actually occurs at 8:30. This is outside of our timing window because our timing window begins at 9. This would have been our best setup up here, but price did not. So up here, this is where we have our A+ setup. This level becomes B+, and even this one is a B+. So this one does not give us a lot of money, and it's a lot more riskier than getting up here. But we have to wait for price. So when price comes to our level and breaks out, this candle here, the first candle at 9, that is our entry. We get in, stop loss, about a 7 pip stop loss. We're targeting the low of the day. What happens? Price goes down but does not trigger our take profit. So it's okay, but the same process that we used to get into this trade is the same process that I used in all of the trades that I took this month, except for one trade, which I don't know how it happened. So basically, if you want to change your strategy, first of all, go back and look at your last trade. Then write down the process. Then look at all the trades that you took throughout the month and see what do they have in common. Then look at the performance. Are you in green? Are you in red? And so that is the importance of keeping track of your strategy month after month after month. Anyway, if you got value from today's video, subscribe and I will see you in the next video. Peace out.